Welcome back. Now let's take a look at how these markets have performed. It certainly has been a bit of a mixed time, particularly of late, and today's pretty much the same. Out in Asia, we saw trade earlier today not necessarily look too bright. It was a red start, in fact. More than 1% lost for the Hang Seng, with the Shanghai Composite also 2/3% lower. The Nikkei index, though, out in Japan also going down 2.3%. Not necessarily a great day out on that front. That didn't, however, filter through to the European market, as it seems to be taking on its own course of action. The increased number of COVID-19 cases out in the United States and in China seemingly not deterring that European market, as all stocks in the major markets there went higher. The FTSE 100 in London going up nearly 0.5%. A good day as well for the DAX, nearly 2/3% to the good on that front there. Over to the commodities board. Well, 0.2% higher for the Brent crude price at $41.10 a barrel. More concerns, of course, then with the higher number of COVID-19 cases. Does that actually mean that you'll see fuel demand slip off ever so slightly again at some stage, is perhaps the big question. For now, shaking that off a little bit to rise to beyond $41 a fine ounce. They're more than 2% gain though for platinum, as that sits at nearly $808 a fine ounce. And gold there sitting at $1,772 a fine ounce there too. Over to your currency front. Well, 17 Rand and 20 cents for a US dollar. Not much to write home about there. Of course, word out of Fitch, though, is that they believe that seeing South Africa's trajectory when it comes to growth and trying to keep down debt and finding new revenue avenues, South Africa may, however, find themselves in another negative rating situation, unfortunately, and things could get worse before they get any better. That, of course, follows on from Moody's, who last week said that they don't necessarily believe that South Africa will be able to normalize or stabilize their debt trajectory to around 87% in about 3 years' time. And that's, of course, as of GDP. On the local market, 1/3% higher up than for the JSE All Share. The biggest gain is today that gold index going up nearly 3%, as resources went up almost 1% too. Industrials, however, sitting in some negative territory. Let's unpack this market movement now a little bit more. We're joined here as well then by Gary Boyson from Rand Swiss. Gary, thank you so much for the time. Really appreciate it then. Not much really to write home about, so a bit of a mixed bag really. Why are markets perhaps a little unsure of themselves, if you want to call it that?
I think there's plenty of reasons to be very, very uncertain in this market. So if you look at it, obviously we're seeing the coronavirus cases spiking, certainly in South Africa, dramatically, but internationally as well. And you're seeing the likes of Leicester in the UK, you're seeing, the likes of Texas as well, considering, more aggressive lockdowns and almost reversing the progress that we felt. So markets, I feel, should be nervous. We had the S&P 500 down slightly on Friday. I think it was 2.4% down. And that was on high volume though. So we actually chalked up on the New York Stock Exchange the second highest volume day of the year on Friday. So that's market selling off in size. In terms of actual fundamental news, there's nothing specifically other than those coronavirus numbers that have people worried. We saw a little bit of news filtering through over the weekend from China that they are seeing a little bit of a bounce back in some of their underlying economic data. The problem is economic data is always backward looking, and we need to look forward and try and predict how the second half of this year is going to be.
Some would have thought that that's what the market does, right? And at some point we saw a spike and things began to look as if things were just normal again. At some stage, even the US market was pre-COVID-19 levels, I think particularly for the NASDAQ, sitting at record levels. But then it's fallen off ever so slightly. Is that sentiment to how the economy will look as well, that we will maybe see a gradual increase and then things fall off ever so slightly again?
No, so I think we're trying to price what's going to happen in the underlying data. So we have seen lockdowns starting to be reduced, those kind of very, very stringent lockdown requirements. But the point is that we've seen many businesses go out of just go under. So in April we saw out of South African business 9% of South African businesses closed in April permanently. So that is obviously going to have a long-lasting effect on the economy. Now, while people do get back to work as the lockdown restrictions ease, you will see kind of a tick up in the numbers. You're going to see a tick up in revenue in companies, and that potentially being reflected in stock markets. But you just get the sense that we're not quite out of the woods yet, and that if we do see a very, very strong second wave of infections coming through, potentially more, almost returning to lockdowns, hospitals becoming overwhelmed, we are going to see that in the operating environment for companies, and we're going to see the financial markets dropping off. Again, if you mentioned it earlier, that one of the strongest sectors in our market today is the gold index. And people have to remember as well that we're not only looking at companies, there are companies that do essentially benefit from fear, from uncertainty.
Sure.
And we're seeing it certainly with the divergence between the normal international companies and the likes of the tech companies on the S&P 500 as well. You're just seeing absolutely stellar gains because they can essentially operate while potentially brick and mortar stores
They're
can't.
almost geared for crisis levels, aren't they, really? Because technological changes and challenges mean that they've had to sort of assess the situation and make sure that they have the right path moving beyond just the normal day-to-day proceedings. If you were to take a look at the local market, though, and the JSE in particular, is there anything that sort of moves the tiller now? I mean, we've had news points with the likes of Sasol as well, right, not so long ago, and it's probably still newsworthy to some extent. But are there perhaps stocks or even sectors that you guys are looking at that make you feel as though there is room here, but it is obviously a speculative market really right now?
No, of course, there's always opportunity, and whenever there's crisis, that's where the real opportunity presents itself. It just doesn't often look like it at the time. So, I actually put on Twitter, I think it was yesterday, just it's a relative rotation graphs, which actually highlights how stocks are moving between kind of overbought and oversold. So, where we see it at the moment is certainly this week. If you look at kind of the next 2 weeks, I think gold counters could potentially have a very good run. We're going to see the likes of Goldfields, Anglo Gold, Harmony, all listed locally, doing very, very well. Sibanye as well, just because investors they're looking for that kind of hedge against uncertainty. So gold does fairly well. The other two companies that it picked up was the likes of Naspers. Obviously gaming, internet business, e-commerce. E-commerce doesn't slow down when.
If anything, it rises.
If anything, people get bored and they start buying things online. So absolutely, that's helping. British American Tobacco, obviously, the South African business still very, very much impacted. With the restrictions around tobacco. But this is an international business, and it provides a very safe and solid dividend yield while interest rates are falling. So that potentially is another opportunity in the local markets. If you go to the small and mid-cap space, I think there's also an enormous opportunity in South Africa. The problem is trying to convince people to actually buy into our environment. And if you look at it purely in earnings terms, we have some very, very good quality companies in South Africa. It's just convincing enough people that quality is there to see the listed share prices starting to rise. The people that are seeing that quality, though, are the private equity firms. So you're seeing a lot of international players, international consortiums coming and buying our listed stocks, delisting them, knowing that they're going to get the profits out of these businesses eventually, just unfortunately not available to the public anymore.
Yeah, so just wait it out if you can, or just form part of the market in some way anyway. All right, very quickly, Brent crude as well, going pretty stable if one calls it that. Fears around demand are obviously one of the big things as well then. If you have more COVID-19 cases, people may need to stay at home, less demand for fuel. That means the Brent crude price also goes down then quite substantially. Do you think that even if things ramp up, we go beyond the current level, sort of 45 towards 50 even? Or is that really just market dependent? What happens with OPEC? I mean, they still need to, of course, decide if they want to continue their supply cuts as well.
Yeah, so it all comes down to the oil price is always going to come down to the supply and demand. On the demand side, we well aware if we do see a severe spike in cases, you're going to see demand dropping off. That is going to put some pressure on the oil price. At the same time, I think I don't think we're going to go and plumb those depths that we saw in the original sell-off, and that's just because remember we had this very unprecedented news around the virus coming through, and at the same time we had Russia and Saudi Arabia almost butting heads and saying that they, essentially they weren't going to curtail production and they were just going to pump,
as much oil
as much as they could, to the extent where we had essentially what's called tank tops, so where people start worrying where they can put it. It's on every oil tanker, every storage facility is full, and people are going, we're just pumping more oil. So it was a very unusual situation in the beginning of 2020, and I don't think we're going to get back to that level. At the same time, we've seen the enormous pressure that US shale is under, and I don't think that you're necessarily going to see them coming on stream maybe as quickly as we have in the past. So potentially higher oil prices will materialize.
Yeah, you speak about the oil and gas sector taking a bit of a hit. I mean, Chesapeake actually in the US has now filed for bankruptcy as well, right? So that kind of tells you the kind of pressure they're sitting under. Gary, appreciate the time. Thank you so much. Always good chatting to you. Gary Boyson is from Rand Swiss. They're joining us and helping us unpack that market movement then. All that brings things to an end here at the Johannesburg Stock Exchange. We continue to give you more news then. Right after the short break, my colleague Nzinga Kunta has more for you. So please do stay tuned for that. From us here at the Johannesburg Stock Exchange, though, That's where the buck stops.